Hi, everybody. Good evening. Good evening to everybody. All right. Let's get started and let's move on. Oh, I didn't want to do that one. Okay, just want to bring this down here, bring it down there. Okay. And just give me half a second. There's one more thing I have to actually do, and that is to queue up my own monitor here. Bear with me. There it is right there. I knew I was missing something. And I'm just waiting anyway. I got to wait for people still joining us here online. So, we're going to be giving him a few more seconds to catch up. And all right, join here. And I just got to turn the volume off on this. If I can just get this thing to work. Okay, that looks, nope, not quite. Hang on. Okay, stay co-host. Disconnect audio. Disconnect audio. Hang on. Okay, there we. I think we're good. We're good to go. All right, we are good. All systems go. Oh, a lot goes into these things, folks. It is 8:01 Eastern Time. I still see people joining us here, and what I want to do is just make sure everybody's online here. Okay. All right. Yeah, you got a good bunch of people here. Welcome everybody. New people, old people. Some of you folks have been around a long time. My goodness. Excuse me. James, hello from St. Louis. Good to have you here. Okay, we have a lot of people here. Wow, nice. Okay, always nice to see everybody. Okay. All right, let's get along here. I don't want to keep you all night, that's for sure. I say that every weekend, of course. Every week I tend to, it's just stay here a long time. I don't know. I don't get it. But anyway, something happens, and then before I know it, the hour's gone, right? But I think we're gonna just push along a little bit faster. I gotta hit this button right here. And we're all good to go. Good evening, everybody. Welcome to DayTradeSPY.com's weekend review for Sunday, August the 23rd, 2026. Summer is almost over. Summer is almost over. I think we got excuse me, this week and the following week, and then it's Labor Day, right? Labor Day, it's coming late this year, I believe. It's the 7th. So we basically have 2 weeks left. But I'll tell you, looking at the weather out there, it's pretty cold out here in Western New York right now, and I hope it's nice where you are. But I'll tell you, excuse me, the sun is going down a lot sooner now. I remember wasn't that long ago when be very nice and bright outside, and here we are now. It's also almost here, put the light on a little bit. It's almost dark. Well, getting down. It's sunset anyway. All right, so hope you can see me all right. If I guess maybe I should well, I guess you can see me all right. I'm not the important one here, folks. I'm not the important one. All right, my name is Hugh. All right, this is what we do. My name is Hugh, and I move this thing up here. And questions box open for your questions and comments. Okay, that's what it's there for. And what we're gonna do here is I gotta get my PowerPoint. Here we go. I got my. I don't know. I feel a little disorganized tonight. Just feel a little disorganized here. Plus, I've got this cat that we're cat sitting and very distracting. I'm gonna kick her off if she doesn't behave. All right, questions box open for your questions and comments. Here's what we're gonna talk about tonight. We're gonna look at last week, and take a look at the upcoming week. Got a little 2-minute tutorial for you. Gonna answer your questions and get a little contest here. Just a very brief contest. It's just basically random number generator. Select a number, and the winner's going to get an ebook, Triumphs and Tragedies tonight. Triumphs and Tragedies. Let me just write this down. Triumphs and Tragedies. Okay. And that's it. So here's your standard disclaimer. Don't forget, of course, options trading is risky business. No question about it. And you do have a good chance at losing your money if you're not careful trading options. That's why you need to learn what you're doing. You can't just jump into this thing here willy-nilly. It's really funny because it's such a double-edged sword, isn't it? There's a lot of money to be made in options, and people just see the one side. They don't understand the risks until they get into it, and then they wow, look at this! I just lost a ton of money. How did that happen? I thought options supposed to be a great way to make money. It is a great way to make money, but again, if you don't know what you're doing, I can pretty much guarantee, not pretty much, I will guarantee that you will lose your money if you do not know what you're doing with options. It's not a matter of if, it's a matter of when. And nobody survives that. Nobody survives that. So that's why you need instructions, and that's why it's very important to get instructions. And okay, I did a video here. I'm just going to briefly tell you this. I did a little video. It's probably going to be released in the next few days. Released in the next few days. Sorry if I speak too fast. But it's about how you need training, and don't just go to these free, artificial intelligence or some of these other things. there's a lot of great information out there, but when it comes right down to it, that personal mentoring, that personal touch, the people that care about how you do, I think that's really important to attach yourself with somebody who understands, and knows, understands, and actually cares. That the empathy, and they can pull you through bad trades. Okay, those guys on, excuse me, social media that are throwing chairs and wearing their baseball caps all the wrong way and swearing, dropping the F-bomb. You're not gonna they're not gonna be there for you when you need them. So don't think they are. And besides, I don't even know how much of that is real. I'm sure they struck gold at some point, but they also lose money too. Anyway, folks, you alone are responsible for all your own trading, and past performance does not guarantee future results. I think you know that. Anyway, so my name is Hugh. Well, where did I come from? Why listen to me anyway? Well, I'll tell you right now. Been doing this a long time. Been doing this a long time, folks. Been trading publicly, teaching publicly since 2010. That puts us in our 17th year straight, and I believe we have the longest running trading room that we know of. Continuous trading room for the last 17 years. You know what? When we first started this, never thought it was never supposed to last. Frankly, it was supposed to be. It was a fluke. And we started as a fluke. Said, "Oh, I'll give it a 3 weeks, maybe a month tops. It'll fizzle out. Of course, it'll fizzle out." Never had any intentions of doing this a long time. And as it turned out, we did go a long time. That's the way it was. A lot of things in my life I found. And a friend of mine had a radio show, and he needed some help, and with just producing music and stuff. And he asked if I would give him a hand. So, yeah, sure. Sounds like fun. I'll do that for a couple weeks, 3 weeks, maybe a month. And then I'm sure we'll be on different things and stuff. And anyway, it was just a hobby. Well, that hobby took me for the next 12 years on the air, and it was fun. But I never thought it would last. But anyway, that's the way it is with everything I do. I start out thinking, it'll go for 2, 3 weeks, maybe a month, and then it'll fizzle out, and then that'll be the end of it. In the meanwhile, there's like a whole career built on this thing. Anyway, we started making money. People took notice, and what happened was they coerced me into showing them what to do. So we started the inner circle. We did some videos, ebooks, had a lot of ebooks out. Did one-on-one training courses. We did special event courses once or twice a year that went on like for a week, and then the trading room, of course. Anyway, in 2022, Eagle Financial Publications bought us out. And I thought, okay, maybe it's this retirement or something. I'm still going to trade. And that's not going anywhere because it's so much fun, exciting, and everything else. And then Eagle thought, you know what, we're going to hire you back. Then they hired me back. It's been great. And I don't know. I think if they'll have me, maybe not, but if they'll have me till the day I die. I love what I do. So is this work? I don't think it's work. It's not. If you do what you love to do, it's not work. So therefore, I don't know when I actually retired, but if you want to call it that. Anyhow, God willing and we able, we'll keep doing it. Anyway, I look at short-term breakout trades for small gains multiple times a day. Okay, and just kind of ramp up those gains a little by little by little by little. Okay, every day, make a few bucks every day, and at the end of it all, you'll have a nice little pot, right? Because frankly, I am not that smart to predict where the market's going to be a year from now, 6 months from now, even a month from now, and frankly, even a week from now. But my cohort in the trading room, John Johnson, he's a retired lawyer. He and I have a pretty good idea where the market's going to go today. Now, we're not right 100% of the time. Nobody ever is. Or sometimes the market will throw a wrench in the works, and you know, or monkey in the whatever it is. But anyway, once in a while we get it wrong. But as a rule, we've been doing very well. I think in our trading we're, I don't know, 95%. I don't know. I don't track. You know, it's very much up there. So, and we've been teaching others how to do it, and that's what we love. So I thrive on the success of other people. Same as John. Same as John. We both trade. We don't need to teach other people, but we enjoy seeing the success of other people. I think that's very important because I enjoy getting the accolade, not from myself, but I enjoy seeing their success. And when somebody tells you that, okay, they got the money they needed to put their kids through school or help their grandkids or have their kids buy a house or something. I mean, that's all very exciting to hear that. And I think that's one way of giving back, teaching people how to fish, right? It's like, I can fish, I can throw you a fish every day, and we have programs like that, or we can teach you how to fish yourself. So we teach you everything we know, everything we do. Not everything we know a lot more than we teach because we don't use everything we know. There's a lot of indicators on those charts, and I've used many of them, but a lot of them are redundant. I don't use them. I only put on the charts what I use. Anyway, moving along, that's what I do. If you want what I have, you got to do what I do. All right. All right. So don't forget Spy on the Market. Spy on the Market is a newsletter that goes out every week. All right. Every Thursday. This week's topic, trading fatigue. All you have to do to subscribe to this is just go to our website, daytradespy.com, and the little pop-up's going to come up on the screen. Leave your email address, and you are on track to get our Spy on the Market. Very nice, very brief newsletter. It's only about a 3-minute read, 750 words. And uh, and this week's topic is going to be trading fatigue. All right, moving along. What are we going to talk about? Well, here's what happened last week. Quickly go over this. It's not what happened that's important as much as what's coming up that's going to happen, but just a brief summary of what happened here. We ran up the to a new high here on last week, Thursday, up to 779.37, and we slipped a little bit on Friday. On Monday, we came right down off a nice chart pattern from record highs, reacting to rising oil prices as a result of the stalled Mideast diplomacy and surging bond yields. Uh, we're struggling with trying to end this war in Iran. I don't know what's going to happen. I don't know President Trump's thinking. He seems to be not making as many friends out there as maybe he would like. I don't know. He just slapped a 50% tariff on everything from Canada. I'm not sure that's going to happen, although I still believe that's part of the art of the deal that he wrote, the book, and it's all part of his negotiations in trying to secure the best deal. But I think he's just annoying. He's just annoying Canada, and I don't know where that's going to end up. It's not going to be good. It's a full-out trade war. On Tuesday, stocks closed mostly lower as tech and semiconductor equities dragged markets with AI debt financing worries. Getting back to that other topic for a second, the U.S. Canada Mexico deal was the funniest thing. He says that's the worst deal ever. Well, he's the one that actually created that deal in his last term. And any deal with Canada or any of these countries, they were negotiated and agreed upon by all the parties. It wasn't like somebody screwing the other person. That's not it at all. But anyway, it's just all part of the negotiations. All right, so we're coming down. We're coming down Tuesday. Wednesday, well, we had a slight rebound to break the 3-day losing streak, driven by the U.S. Treasury announcing plans to double long-term bond buybacks. The One of those days, I don't know if it was Wednesday or Thursday, the debt came out, what, 40 plus trillion-dollar debt, more than the gross domestic product. So if you take the value of everything that we make here in the US and apply it, 100% of it to the debt, it's still not going to be enough to bring the debt down. As a matter of fact, we are paying over $1 trillion a month. Is it a month? Or a year? I'm not really sure. Maybe it's got to be a year to paying the interest on the debt. Just the interest. That's a lot of money, a lot of money. Anyway, not sure what they're going to do. Uh, I had somebody in the trading room comment, oh, maybe the U.S. should sell Canada and you get the money, sell it to China or something. Oh my gosh. Funny clowns we got in there. Anyway, Thursday, tumbled. SPY tumbled, reversing a brief market relief as inflation and rising oil pressure renewed broader market fears. Came back down again. We tested 762 at the end of the day on Friday. On Thursday and Friday, we rebounded a little bit here, back from earlier losses, although SPY still finished the week in the red, fearing ongoing geopolitical tensions. I don't think we are any closer to reaching a deal with Iran than we were weeks ago, months ago. I don't know. I thought a couple of weeks ago we had a peace treaty, didn't we, or something? I don't know. It changes hour to hour. So what you see now isn't necessarily what it's going to be, a couple hours from now. Here's a look at the seasonal charts, folks. The blue line at the top is the current SPY price. The average of last 5 years daily close is the red line at the bottom. You can see right around now, we're just kind of bouncing around for the next little bit. And in September, we're going to be actually going down a little bit into October. Excuse me, coming October here, we're gonna get some some volume back and forth, and then we're gonna start our upward climb to the end of the year, as we normally do. But here's a look at the closer focus in on it. Going back a week ago, we actually rose about 2 points, and historically we only rose about 1 point the following week. So I expect things to be pretty stable, pretty bouncy in this week, unless, of course, there's a major breakthrough with something like, I don't know, peace treaty. Don't hold your breath. We'll see what happens. I think they're sort of at an impasse with that whole thing. So, meanwhile, the countries keep lobbing bombs at each other and, hitting ships, closing the Strait of Hormuz and oil and on and on. It's been a roller coaster week, folks, for rates, interest rates. Pressure on long-term treasury yields sends stocks lower. Although the Treasury Department's buyback pushed yields lower, broader forces driving them higher remains. We have August and September, historically seasonally weaker, so expect some turbulence coming up the next several weeks. There's still uncertainty surrounding the midterms as well. We could see a little consolidation, but we've got a resilient economy here, all right, and strong corporate profit growth. Well, that could continue over the next 12 months, and that's probably what's going to sustain a lot of the prices. Here's a look at the earnings growth that's been revised higher across market caps. Um, we see here how the estimates have elevated from last year at this time. Even the small caps, mid caps, all across the board, they're expecting greater growth, especially larger caps, fueled mostly by artificial intelligent investment, capital investment. Okay. Now, people say that's a bubble and where's it going to stop and what's going to explode, whatever. They're still building out. And as long as people use social media and you see all the kids on their cell phones 24/7, that's going to continue to grow, right? Because people complain, oh, I don't want those data centers in my backyard. I always don't know, well, why is that? Why? Why? Don't they contribute money to the economy, local economy? What are they using resources that are going to hurt you or something? Or, I'm not really sure why the problem with that, but are they noisy? Maybe I just don't know. I never actually really got into it that deep, but maybe there's something with them. But you complain about having these things in your backyard, you continue using your data like there's no end to it. So that's what it is. You don't want slow data, you want fast data, so you're gonna have these data centers. Anyway, maybe they should have them all in one place. Maybe they should have them in the middle of the desert in Nevada or something. I don't know. We'll do something with them. But anyway, all the growth stocks. So when you have some companies with some really good growth, some of these major companies, the Magnificent Seven, they're going to pull up the other stocks as well as a rule, right? And especially the companies that service them. You need people to build centers. You need people to create the computers, to create all the stuff. By the way, it's not just the U.S. economy that's being elevated here. These companies that are injecting these billions and billions of dollars into this stuff, they're also helping companies around the world and economies around the world. Anyway, it's looking very good here. Looking into at the end of 2026 here into August, and we're 31% plus. I mean, that's pretty solid. The mid and small caps too, they're running along very nicely here. From 19% last year to 24, 25% this year for the mid caps. Small caps, major growth there, another 8% for these guys. Yeah, however, the week ended up in the red here, and the S&P dropped 1.4%. Still, year to date is 12.9, and if that extends into the rest of the year, for at this current rate, we're still going to be pushing up around 19-20% for the year for the S&P 500, which is pretty respectable. Okay, even though week to week, sometimes you'll see these things bouncing around. Dow Jones dropped 0.8%. Still 12% there year to date, and the Nasdaq dropped 2%, and even with that, they're at 13.1% year to date. Of course, not surprising because that's where the big caps are, the tech stocks, and you're going to see more volatility in the Nasdaq. That's why you're going to see, major moves there, and perhaps they're going to have the bigger move, but they're also going to be the first to fall when things go south. Week ahead, we've got Treasury Secretary Besson speaking on Monday. That's the only high impact news there. And let me just see what time he actually speaks. That's kind of important because if we're going to be in the trading room, it'd be nice to see if we are going to be affected by that. He is scheduled to speak at 2 p.m. 2 p.m. And I believe he is going to be talking about the new U.S. sanctions and economic measures against Iran. He's going to be speaking in Washington, D.C. So you're going to hold a press conference, and I think excuse me, the topic is going to be anybody who does business with Iran, we are going to sanction them. So it's a way of controlling the world. Tuesday, consumer confidence report, conference board, consumer confidence, new home sales, Richmond Manufacturing Index. Wednesday is going to be a big day, folks. Very high volatile day Wednesday. I am going to, excuse me, I'm just going to kind of, let me see if I can maybe stress these guys here. It's 3 letters, but that's a very important one. Personal consumption expenditure, and I'm gonna bookend these two guys. So the PCE, personal consumption expenditure, this is the major indicator that the Feds use, the Fed Reserve, to determine what to do with interest rates. Is inflation going up or down? That's going to be released on Tuesday, and on Wednesday, and I believe it's Wednesday morning. I'm going to just check that for you right now. That is coming out actually at 8:30 Eastern Time Wednesday morning. We also have gross domestic product, durable goods orders, personal income, personal spending, and here's the other one, Nvidia earnings, and I just want to see something. When are those numbers going to be released? Let me just take a look at that. Next Wednesday. We're still in earnings. So we're not finished, but most of the big names are done. Nvidia, I believe, is going to be after the market closes on Wednesday. So watch for some elevated volatility on Wednesday. It's just while I'm talking here about earnings, I want to see if there's anything that we should maybe pay attention to on Monday. Nothing really, nothing to write home about. Tuesday, Intuit, Zoom Communications, Dick's Sporting Goods. Still some retailers coming in here. Wednesday, as I mentioned, Wednesday after the market closes, Nvidia, CrowdStrike, Salesforce, Synopsys, Agilent Technologies. These are going to be reporting on Wednesday along with Williams Sonoma, Hewlett Packard on Thursday, Marvel Technologies, Autodesk, Workday, Dollar General, Dollar Tree on Friday. Nah, nothing really on Friday. Okay. So those are the earnings that are going to be nothing market moving except Nvidia on Wednesday. That's going to be big. And also the personal consumption expenditure. These guys in the middle as well. Thursday, things lighten up a little bit here. Unemployment claims, as always, and it's going to be the first of a 2-day event here for this week on the Jackson Hole Symposium. This is where the Fed Reserves and key players get together in Jackson Hole in, I think it's Wyoming, and they kind of go over everything and determine what happens there. Not a lot comes out of those that's going to be moving the market, but we could see some comments that are going to impact the markets, perhaps. We'll see. Anyway, keep an eye on that. A lot of stuff coming on Friday, second day of the Jackson Hole Symposium. Also, the Chicago PMI Fed Chair Warsh speaks at the Jackson Hole Symposium. Also, we have consumer sentiment and inflation expectations on Friday. So, what does this mean for volatility? Well, coming up, I think it's going to be high pretty much all week. Thursday is going to pull down a little bit to maybe medium, but expect high Monday, Tuesday, Wednesday, Friday, and quite possibly on Thursday as well, depending on what happens here with some of the other, maybe the comments from the Jackson Hole Symposium, and we'll see how the Nvidia earnings might. In fact, you know what? I'm going to change that on Thursday. I'm going to move that to high as well. I'd rather err on the side of caution than miss that. But I think if Nvidia earnings are coming out after the market close on Wednesday, we could see some real moves on Thursday because of that alone. And unemployment claims could move the needle as well. So, anyway, I also expect elevated volatility whenever President Trump speaks or Kevin Warsh, Fed Chair Kevin Warsh. Um, it's just because what they say, the market listens to very quick, very well. We don't know when Trump is going to speak. Usually, that just comes up on the same day as an unscheduled thing, and then gets on the schedule right away. And so we'll see if there's any comments there. All right, 2 minute tutorial, folks. Let's get into this here real quick here. What to do when you suffer a loss. What to do when you suffer a loss. I know there's a lot of controversy swirling around this. Well, I gotta get back in and make it up. Yeah, I gotta make it up. Well, here's what to do. Listen carefully. Number one, step away. We just and by the way, we had some losses this week too. I had a loss. My cohort John Johnson, he had a loss. I know some others had losses. It was a very turbulent week. We had head fakes. We just had a lot of crazy market moves. The market was all set up to go in one direction, then it reverses on you for no apparent reason. It just took a turn the other way, and oh my gosh, what's going on here? Anyway, step away, close your platform, leave the room, calm your emotions. What do they say? There's some what 4 or 5 steps to a loss when you have a loss of anything. Number one is was it denial, and then anger. There's a state of anger you go through. Oh, how could this happen to me? How could I had such a winning streak and now I had a loss. How could this? You're angry. And then there's an acceptance. There's an acceptance period, and then you I guess you move on. I'll have to do a segment just on that alone. I don't really know what that is, but anyway, I used to know these things. Anyway, calm your emotions. Step two: no revenge trading. It's very easy to get lured back in, and I've known people who would well let's say okay, I've got $10,000. I just blew up my account. I blew up 6,000 of it. I've got 4,000 left. I'm going to get that 4,000 in there, make some money, make up before the end of the trading day. And by the end of the trading day, they've got, $28 left. So they blew it all away because the revenge trading did not work. Do not try to make the money back right away. That usually leads to bigger losses. Okay. If you had a bad loss, something happened. Something happened, and whether it's the market or whether the way you misread the setups, perhaps whether you jumped in too early, whatever it is, something happened out of the norm, and just don't trade, just hold back, accept the outcome. Now this happens. Sometimes people have maybe six, seven, $8,000 that they start with. They blow up their accounts. They've got $2,000 left. Take a look and see, okay, treat that loss as a normal cost of doing business. It's not a personal failure. The market does not know who you are. They don't care. It's not like they're going after you. All right? It's not a personal attack. It's the market is the market, and it's not it's not a reflection of your personal worth or anything. Then go back when you accepted the loss. Okay, now analyze it. Yeah, review your log, your journal. You are taking notes, right? You should take notes. Take notes. Look at these trades as actual, for what they are. Don't just jump in and out. You can, but you're not going to learn anything if you don't journalize or log your trades and go back and review what you did. And that's how I became successful. I used to journalize, I still do, journalize my trades. And then go back and learn from the mistakes. And guess what? If you stop doing all the mistakes, and maybe this is an exercise you should try, try and find that one mistake that just seems to cost you money a lot. What is that one thing that just costs you a lot? Is it jumping in too early? Is it not recognizing maybe a certain chart pattern that seems to work all the time, but you jump in too early, you're forcing it to, you're forcing, if a chart pattern doesn't jump out at you, there's nothing there. Don't try to force these patterns. Are you not staying in long enough to let your Let your trades mature. Is it a position sizing? Is it managing risk? There's a million things, right? Find the one thing. If you can eliminate that one thing that's costing you a lot of money instantly, you'll see your results change, right? All right, note the details, review your log, learn from your mistakes, check the rules. Did you follow your plan? And identify the cause. Okay, what happened? And it could be something very much out of your control. Yeah, I lost. Why did I lose? Well, because, we went and, the U.S., military made some strikes on Iran and Iran struck back and they closed the Strait of Hormuz. There could be some legitimate reason why the market simply turned against you. And there are these outlier situations, outlier trades. And I just happened to be in it when it happened. And that's why I lost. Is if you can justify it and determine what it is. Now, if it's something you had done, again, learn from it. Learn from it. Could have been bad market conditions, poor timing, broken rule. You've got some rules. Did you break the rules? Did you were too anxious? Sometimes what happens is when I have a string of good trades, I look to become more cautious because that's where I fear the worst can happen. I get overconfident. Inside, I start thinking that, oh, I'm an excellent trader. Subconsciously, I'm just making really good trades. I'm doing all these things right, and I just have to go in and just trade normally because I'm now a winner. You let your guard down. It's very easy to let your guard down when you are successful because things are just happening very nicely for you. You're at one with the market and you just feel like going, but do not let your guard down. In fact, put your guard up even more if you've had a string of successful trades because that's when you get more vulnerable, right? Go back and check to see what happened and then rebuild your safety, rebuild your account safely. Reduce your size, your trading size, cut your position size until your confidence returns. Go back to sim trading for a while, right? There's no shame in sim trading. I still sim trade sometimes too. Not all my trades are real trades. Sometimes I'll say, oh, you know what? Yeah, I made some money trading. I did two trades. I'll say I did two trades today. They're both successful. I find that for myself, that trade number three, that turns into the big challenging trade that ends up turning against me. So I kind of stay away from that third trade. I'll put in a sim trade on that third trade. Just see where it would have gone if I'd have done it in real, right? Get back to sim trading if the loss shook your discipline and fix the leak, right? See what's going on. New safeguards or restrict your daily loss before you risk real capital again. Find out again what is it that happened and fix it. What are the steps that you're going to take? And write them down. Put them in your journal. Okay, this is what I did. I jumped the gun. I thought for sure it was going to crack that resistance and I was going to get ahead of the game by a nickel. And as it turned out, no, the resistance took hold and, for the third or fourth time hitting up against this resistance. And this time it just really tanked. And by the way, when the market goes against you, it goes against you real fast. I don't have to tell you that, right? You can't get your sell order in fast enough when it turns against you, right? You can lose 20, 30, 50% in no time. You say, oh my gosh, you're scratching your head. What just happened here? So now you panic, you sell. I just lost 60, 70%. You think that that's a good thing. So, well, you say, I could have lost more. Meanwhile, you're still watching it like it's your trade. 10 minutes later, it goes back up, and now you're killing yourself emotionally. You got burned. You get burned financially, then emotionally. Yeah, that's part of trading, right? Anyway, those are the keys. By the way, when I give you these 2-minute tutorials, I hope you guys take notes. You know what I'm saying? Folks, trading room hosts, John and myself. All right, we're friendly. We got a little friendly competition going on to see who's the better trader. So we started this on the 17th of August. Starting with $2,000, going to see how much we can earn in the next 4 weeks. Join us in the trading room, and here's where the standing is right now. John, believe it or not, is still ahead by $3. We're excluding commissions on this, by the way. So here's what happened. We both started $2,000. Now, John beat me $129 to $51 the first day. The first couple of days we didn't actually trade. We started trading on the third day. So he really kind of cleaned my clock on that first trading day. But I beat him on the second one. I got 129. He only got 78. And on Friday I picked up 30 points. He only got 6. So I had two winners over his one one winner, but his one winner was much greater. Therefore, he is still ahead of me by a mere $3. And we're just kind of out, trying, starting out small here. And but we're gonna inch it up. We're gonna inch, and I hope to get it stronger. But I'll be frank with you. The market's been very, wishy-washy. We would trade in a range. We're waiting for the catalyst to break out of the range. It goes up to a range and loses support, goes down. It's been very tumultuous here in the last little while. It's been very crazy, crazy markets. It has not been easy. So anyway, that's what we're doing. All right, what else can I tell you? The trading room. Follow us in the inner circle. This is where we actually show the results. We talk about the results, see which professional traders going to come out first, and who are you going to be rooting for, John or myself. And I hope you root for me because I plan on coming out ahead in this game. So we also got this other trading program we call the 2026 goal. All right, it's not really a challenge; it's a goal. So this is where in the trading room, all the trades that we narrate, if you would only have purchased 5 contracts, excuse me, if you'd only traded 5 contracts in each of the trades that we narrate in the trading room, and all the trades in the trading room, this is where you would have been. This is where we would have been. This is how we've got the estimates here. And again, it's not going to be exact because everybody's going to get in and out at different prices. But this is had you gotten in right when we did. You'd have been up $39,700. Now I didn't write down the whole weekend here, but we had a couple bad losses earlier in the week that we had to punch up, but we're still just under 40,000 and I hope to get over that this week. And this takes us into the end of Friday. And this is kind of what's going on. So not bad. The average investment here, we're talking about $2,000, $3,000, sometimes a little more. But basically, we're looking at $3,000 per investment for 5 contracts. Okay, so all right, folks, we're going to talk about the trading room here. This is where John and myself, we host this every morning, 9:20 to 10:30. This is where you really need to be. And we've got other programs as well. And you can always click on those QR codes, which I'm going to leave with you at the end of the session. I don't want to kind of, spend a lot of time talking about each of those, but you're certainly invited to check them out because we got the inner circle, which everybody should be in, especially since it costs next to nothing. I don't even think it costs you a cup of coffee a day, quite frankly. So you should all be in that because the value of that you get, the morning market report, even if you use it once or twice a week, you more than will have made up the cost of the program. John goes through, he checks all the fundamentals, the technicals, he checks everything, market sentiment, he checks everything, and he compresses it all and gives you a summary as to where he sees the market going that day. He's very accurate with this. He sends it into your inbox just after 9 o'clock Eastern time every morning. So we do the heavy lifting for you so you don't have to. If you were to compile all the information, all the data that he does, you'd have to probably be up very, very early in the morning. And you'd have to secure all your data feeds, subscribe to so many different sources, social media, the X and what are the other one, the Truth Social. You'd have to go to all the various news feeds, Bloomberg, Wall Street Journal. I mean, they're all there. Anyway, that's why the inner circle is so good. We also have a couple services, the DayTradeSPY Signal that's sent to your cell phone, and the DayTradeSPY Pick of the Day, which is sent to your email every morning around 9 o'clock. The pick of the day, the signal can come anytime between 9:30 and noon, 3 to 5 times a week. But these are picks that are designed to be purchased right early on for a gain, 5 or 6% gain. Anyway, we're not going to talk about that tonight. If you want to go to those, I'll put in the QR codes so you can actually see those. I want to tell you about the trading room, especially for the new people. All right, these are recorded for later review, so in case you miss them, you can always go back and see what we did. These are designed to be a learning experience. It's interactive, so you can actually communicate with John and myself in the questions box. He and I are the only ones to see them, so you can go ahead and say whatever you want. Never feel embarrassed to ask a question. Fully narrated. This is where our strategies come alive. Real time, real market conditions. All right. Real real trades. and sim trades. And this is, I mean, this is the best value ever. You're going to get a live streaming learning experience from two professional traders. 24.95 for the year, or only 6.99 a quarter, which is like $54 a week. Our business advisors say that these prices are grossly underpriced. Underpriced. The value is phenomenally more than what you are paying for these. So everybody should be in on this. And you need to be here, folks. If you know what calls and puts are, this is where you need to be. I don't want to say too much, but I got a feeling they might be raising the rates on these. I'm guessing that if you were to get in on these now and lock in at these prices, it's not going to go any lower. I'll tell you that right now. It's not going to go any lower. If you lock in at these prices, and then if there is an increase, you'll probably get it for this original price, this low price. So it's a false economy to think that, oh, it costs too much money. When you think of what you're getting, oh my gosh, let me tell you, it's grossly underpriced, and you should really, you should grab this while you can. Anyway, enough of that, folks. You really want to know where you should be? You're not really sure. You might think, well, you can only get in the trading room twice a week. Maybe I should take the pick of the day, or maybe the signal's not bad. I don't know. Should I even bother with the inner circle? I don't know. Folks, give us a call. Go to our website, right, and book a free 15-minute Zoom call because that can make all the difference. All right? No obligation. Now, this is where we're going to discuss what your plan going forward. It's not, well, I'm in a bad trade. Can you help me get out of this bad trade? No, that's not what we're going to talk about that. Okay. I'm not trying to discourage you, but we're not giving, advice like that on these calls. These calls are designed to lead you down the path that is probably the most efficient, most economical, and the most value for you, right? So I like to do schedule a meeting. We've got some good times here. Schedule a meeting. Just go to our website up at the yellow bar here, the gold bar, right in the middle. Schedule a meeting. Click on that, and you will go to our calendar. All right, our calendar, and just get right in there and book a convenient date and time. I know it goes out, I don't know, a couple days, few days or whatever, but book a time and get right in there, okay, and do that. So, all right. So, what else we can talk about here? Let's see. Oh yes, I'll take some questions. I'll take some questions here. Let's go back to the questions box. Real quick here. Okay. Excuse me. One of your rules is if the market's going against you, get out of the trade. Question, how am I to know whether the market's going against me? Okay, well, these are things we talk about in the trading room, and and very much of it is subjective. I mean, I could show you a chart, and I could show you a chart, and two people can argue it's going up or it's going down. The immediate 1 minute candle could be green, which suggests going up. You could say the market's going up at this point in time. But I could pull in another chart, and I don't have a chart open right now, so I can't really show you. But I could have, say, the last 10 candles pushing to the downside, right? 10 candles pushing to the downside. And you can argue, say the market's going down. So how can you tell? Well, I would say, Garth, by looking at uh, any breaks off support or through resistance. In other words, if there's a level of resistance and the market's popping up through that, even though it might be bouncing up and down, but as a general rule, if you see that pressure to the upside, I would say the market is pushing to the upside. Conversely, if the market ran up and say pre-market, it's up in a tight range at the top, now it's pushing down on that support, all of a sudden it breaks the support, I would say the market's going to the downside. But these are things we talk about in the trading room, and we assess whether the market's actually looking at going up or down. And then we decide, should we get out of this trade? Should we hold on? Are we losing confidence? The other day I was in put options, and the market was pushing the upside, and quite frankly, I lost confidence in the puts. And I told her, I said, I'm not so sure this is going to be a good idea to stay with this because if we continue to break to the upside And I don't know what it was, earnings, maybe something with whatever was pushing, the news, the fundamentals. There's just a lot of pressure to the upside. So you know what? I'm just gonna take my loss on these puts. I don't want to stay in this and worry about it. And I did. So I took a loss. And the funny thing is, later that afternoon, I went away and I came back later that afternoon and I saw the charts and the market actually in the afternoon had tanked pretty good. And had I stayed with them, I would have made out like a bandit. But you never know, right? You never really know until after the fact. Um, I saw something the other day, a brief video, or I don't know if it was I can't remember if it was a YouTube video or Instagram or something. And one of these clowns was there. Oh, I just cringe when they say that. Well, if you would have bought down here and sold up there, and he's yelling at everybody as if he's giving them hell because they didn't buy at the low and sell at the high. Well, hey, jerk. You could not have known it was the low until after the fact, right? Until after the day is done. You could not have known that it was at the high until after the fact. So don't say, had you bought? Well, you didn't because you didn't know that was the low. And if you go back a little bit, it was the low then, and then back a little bit more, there was a low then too, right? So if you'd have bought at the previous three or four or five lows, thinking that was the low, which is what it was at that point in time, you would not have known that it was going to go down even lower. Anyway, guys like that infuriate me so much. What makes me even madder is that people follow them like sheep, like, oh my gosh, what they, anyway. I'm just going off because on a rant. I'm going on my rant. Folks, you want to learn how to fish. You want to learn what to actually look for. And those are the things that we teach you in the trading room. Those are the things we teach you in the inner circle Wednesday night webinars. Those are the things that we teach you in our courses and different things. So that's what you want to learn. Anyway, moving along. Fibonacci is also used to predict where the markets will probably go. Now, John is an expert at Fibonacci, and I will always give him that. He's a very good Fibonacci predictor, but I have noticed that it doesn't always follow Fibonacci. Will I want to bank all my money on it? That's just one indicator I use. I like to combine certain key indicators. All right, not all the indicators out there. There's like hundreds of them, but there's certain key indicators that I understand to work very well. And those are the ones I like to combine and use, and they work very well for me. And these are the things that we teach uh, in the um, in the trading room, right? Who wrote Ghost Written? He never had a conscience. Okay, I'm not sure who you're talking here, Rod. Anyway, okay. Not too many questions here this morning. This evening here. How come John doesn't come on the Sunday night sessions? Okay, he does. We got a little deal going. He does the Wednesday night webinars, and I do Sunday night. Okay, gives us each a break. We don't both have to be on both nights. Okay, and I know that he's very good at Wednesday nights with the inner circle. So what happens is the inner circle members they get invited to our Wednesday night meetings, and that's what we do. So. And I do the Sunday night shows, so that works out well that way. Okay. Why do you call it Fibonacci instead of Elliott waves? Okay. I don't know. I understand that it might be two different things. I don't know if the Elliott wave is Fibonacci or Fibonacci is Elliott wave. I thought they are both different indicators. I could be wrong. I never did get into the Elliott waves. What I did was I looked at many different indicators. I'm sure I used them at some point in time just to see what they're about. But I noticed that there were many redundant indicators, many renamed indicators, many, and they all show history. Um, I found that a lot of people lost money because they would have so many indicators on their charts. This one gentleman, I remember, went to all these different courses and back in the day, I'm going back 20, 25 years here, whatever. They had these different courses, and we would go to these different cities, Tampa, Orlando, New York, Atlanta, wherever we would go. And we'd see the same people moving around. They'd be at the same events. And I remember this one guy, I don't know if it was in Orlando where, but So one guy, I got talking to him and he says, "Oh, I just live not too far from here. Why don't you come over and see my setup?" So okay, fine. After the session, we went to his place and I remember he used to smoke a lot. And Jimmy was his name. And he takes me in his office and he's smoking away ashtrays full of cigarettes. I'm cutting the smoke with a knife. That's what I remember. But these monitors. I think he had about, I don't know, maybe he had three computers, all these different monitors everywhere, and a TV up in the corner. He's watching CNBC and all this stuff going on. And I said to him, "Oh my gosh, Jimmy, you must be making a lot of money down here. Look at all the money you must be making here. Look at all the stuff you got." I remember he butted a cigarette and looks at me and says, "Hugh, I can't make any money to save my life." Wow. I said, "Well, if I may, I'm thinking here you're probably waiting for all these indicators to line up, right?" And oh yeah, I said, "Well, that's probably why. But by the time they all line up, that trade is over. That trade is over. That's long over because, when the key indicators that you probably should be looking at lined up, that's probably when you should have gotten the trade. But you're waiting for everything to line up, and it's taking longer for some than others, and you're trying to scan, I don't know what he had, maybe nine monitors or something, whatever, and a lot of indicators on all of them, and you're getting lost in the indicators. What you need is just basically the candlesticks. Where's the price going? There's nothing that's going to tell you more where the price is than the price. That's it. There's no predictive indicator that tells you where it's going to go. We do our best to predict the future based on the past, but you don't need, 100 indicators because all you're going to do is get lost in the indicators and it's not going to happen for you. Anyway, he just said, "Well, you think so?" Yeah, that's what I think. I mean, I make money and I've got a small handful of indicators that I use. So it's not the quantity of indicators, it's the quality of the indicators. Find those indicators, and we have our set of indicators, and I have my set of indicators that work very well. John has his set of indicators that work very well. He likes to use Fibonacci, pitchfork, and support resistance. I like support, I like my set of indicators, but we have a saying that when our indicators unite, our trades ignite. So if John says, "I think the market's going to tank. I'm looking at getting into puts." I'm looking to say, "Yeah, I agree with you. I think you're right, and I'm getting into puts too." It's not that I'm just like sheep following along, but if I see my indicators are telling me the same thing, yeah, guess what? I'll get into puts too. Now, once in a while, we have, we see things differently. I'll see the market going up, he'll see it going down. So one right doesn't make the other wrong. It just might be a different time that it's going to deliver your profits. Anyhow, all right, let's get on. Let's get on to our contest, folks. I want you in the questions box to give me a number between 1 and 100, 1 and 100, and and let me know who it's going to. Let me know what it is, and I'm going to give you about 30 seconds here to punch up a number between 1 and 100. And the winner, and this is not the number that you see on the board here. This is a random number generator. This could be last week's, I don't know, but that's not the number. I'm going to just pull it over the side. And then when we're ready, we're going to hit the number generator and determine what the special number is. Okay, and then the winner is going to receive Triumphs and Tragedies. It's an ebook based on real stories of people who had come through our system over the years. And there's some great stories there. I think there's one about myself too, as a tragedy. So, but we've got some real tragedies in there. And I really like the one about Kim, this girl Kim. Oh my gosh, I should actually have a session on her because she was. Oh, I still think about it from time to time. Whatever happened to her? But anyway, you got to get the book to you got to get the ebook to talk about to see that story here. That was a very disheartening story what she did, and we get some real triumphs too. Let me tell you. Oh my gosh, we've got some amazing triumphs. All right, let's see. Five, four, three, two, one. We are closing off. We are closing off the. Okay, all right. Okay, if you don't have your number in now, you are closing off. Okay, Michael R is last. Okay, I am going to bring out the random number generator. So the person closest to it is going to win the ebook. If, say, there's a tie, let's say you're 3 points off each, there's two people 3 points off, you both get the book. So I'm going to click this number. I'm going to count. I'm going to hit the button here. I'm going to count, let's see, three, two, one, and the number is 58. The number is 58. Let me see who is the closest to 58. I'm going to go scroll through all of these numbers. 58 so far, 73, 58, 66. Okay, Steve, just give me half a second here. Steve at 66. 58, so 66, 58, so he is 58, he is 8 off, right? 58, Steve is 8 off. Okay, 58. Okay, there's another one, Scott A. He's also 66, he's also 8 off. I have Kevin coming in at 62. 62, he is 4 off. Anybody tighter than 4? Doesn't look, nope, it looks like Kevin G is the winner at 62. Congratulations, Kevin G. I will get you that ebook right after the session. And yeah, all right. So what we're going to do here is, I guess, wrap it up, right? Wow, very nice. Folks, thank you very much for joining us right here tonight. The recording will be out shortly. Here are the QR codes for the various services that we have. The Inner Circle, DTS Signal, that's DayTradeSPY Signal, Pick of the Day, and the Trading Room. Click on these QR codes for more information and to book. And by the way, when you book through here, rather than the website, there are two prices. These QR codes give you the better price, okay? Or you can go to our website, which will give you the sort of the rack rate, the higher price. But go to these QR codes, you'll get a better price. Been a pleasure, folks. We'll see you the next time. Have a good night, everybody.
Eyes on the prize, I can tell you what